Welcome back. This is Heidi Henderson with Engineered Tax Services. We are the only licensed engineering firm in the United States specializing in tax strategies and cost segregation studies. Today, we're going to walk through 5 red flags every real estate investor should be looking for in their cost seg report. By the end of this video, you'll be able to evaluate any cost seg proposal in about 90 seconds. So let's get started. First off, why does this matter? Cost segregation isn't a regulated product. There is no IRS mandated standard for what a study has to contain. 2 reports for the same property type can carry the same name while delivering wildly different deductions and audit exposure. The IRS Audit Technique Guidelines, ATGs, I'll refer to them, they give us 13 elements of a quality study. But enforcement happens on exam, not on filing. So that's where these 5 red flags become really expensive. So let's get started. Red flag number 1, if there is 0 land value. Every property has a land value. The IRS ATGs specifically instruct auditors to verify that land has been properly separated from the depreciable basis. If your report lists land at 0, the basis is inflated by exactly that missing amount. We just looked at a real basic report that did exactly that. It was $142,600 of land sitting inside the depreciable basis for $460,000 property. That's not a footnote on exam, that's a headline because it's a huge audit risk. Red flag number 2 is when there is no site visit. The IRS ATG names the detailed engineering approach from actual cost records as the most reliable methodology. That methodology requires an on-site inspection, photographs of components, a review of any as-built or blueprints if you have them, reconciliation of actual cost records, interviews with facility management, and the credentials of the person performing the site visit. An online questionnaire doesn't produce any of that. It produces simply a number. Red flag number 3 are fake engineering claims. In most US states, you cannot legally call yourself an engineering firm without a license. The word engineering in marketing is doing a lot of work for providers who don't actually hold that credential. 3 verifications you can run in 2 minutes. Ask for the engineering license number. Check your state's public registry and ask for a sample report, or look for a corporate seal and a PE signature in a redacted study. They will be in the studies if they're there. Red flag number 4 is 15 or 20 generic line items. The difference between 15 generic components and 100 or 1,000 individually identified components, it's not just about thoroughness. It's whether you can ever claim partial asset disposition when you renovate or verify those assets. If your report has no kitchen and it's just one line, $4,300 for cabinets, you have no asset to dispose of when you tear out a specific cabinet. The future deduction is gone before you even start. Red flag number 5, no audit defense plan. The report is upfront, the defense is what happens on exam. Ask any provider, what would you send the IRS if my study were examined tomorrow? And if the answer is a PDF and a phone call, the answer is incomplete. A real engineering firm has in-house tax attorneys, an original site documentation, and a documented exam response process. These are 5 red flags. If you can run a report past these 5 questions in 90 seconds, you'll know what you're looking at. Free 5 questions checklist. We've got a link in the description. Use it before you sign with any cost seg provider, including us. I'm Heidi Henderson with Engineered Tax Services, and we'll look forward to seeing you next time.